Ladies and gentlemen, it's time to discuss silver investment demand. The moderator of the session is Mr. Johnson Lewis of FinMet. The panelists are Mr. Amit Sajeja of Alpha Alternatives Holdings Private Limited, Mr. Navneet Damani from Motilal Oswal Financial Services, Mr. Amit Vashisht is from ICICI Prudential, and Mr. Chirag Thakkar of Amrapali, Gujarat. A little bit of brief about all our panelists before they take their place on the stage. Mr. Johnson Lewis, our sessions moderator, is the managing director of FinMet, a Singapore-based boutique firm specializing in precious metals, trading and risk management solutions. With decades of experience in global commodity markets, Mr. Lewis has built a reputation for deep market insight, strategic thinking, and strong industry networks across Asia and Middle East. His expertise spans bullion, structured products, and commodity advisory, making him a valuable voice in financial market discussions. Up next, Mr. Amit Sajeja is the head for research in commodities for Alpha Alternatives Holdings Private Limited. As a head of research for commodities for Alpha, which is a leading multi-asset investment management firm, Mr. Sajeja brings deep expertise in commodity markets, macroeconomic analysis, and derivatives trading, and his research focuses on identifying trends, risks, and classes. Mr. Navneet Damani is a Senior Vice President, Commodities Research for Motilal Oswal Financial Services, and where his expertise leads to research on bullion and energy markets. He is widely quoted on financial media, and his deep understanding of global macroeconomics and commodity trends helps investors and institutions navigate market volatility. Mr. Amit Vashisht is the lead for ETF for ICICI Prudential Asset Management Company, and he brings with him a strong focus on commodity and currency-based investment solutions. With extensive experience in asset management, financial markets, and macroeconomic strategy, Mr. Vashisht has been instrumental in developing and managing innovative ETF products that integrate gold, silver, and other commodities into retail and institutional portfolios. Finally, Mr. Chirag Thakkar, the director, Amrapali, Gujarat, is a leading figure in the Indian bullion trade and serves as the director for Amrapali with a strong foothold in silver and gold trading. Mr. Thakkar has been instrumental in scaling the company's bullion operations across India. He is also actively involved in industry development and a frequent speaker on market reforms, infrastructure, and bullion trading ecosystems. This is going to be super interesting, and for great listening, everyone, brace up as I hand this over to our sessions chair.
Good afternoon, everyone. I hope you're having an insightful day so far. And welcome to this exciting panel discussion on silver investment demand, a topic that's gaining momentum both globally and here in India. I'm Johnson Lewis from FinMet, and it's my privilege to moderate today's session. At FinMet, we have been closely tracking trends in precious metals. And it's clear, silver is no longer just a poor cousin of gold. It's emerging as a powerful asset in its own right, fueled by industrial demand, its role in clean energy transitions, and increasing interest from investors seeking portfolio diversification. Today, we'll explore how this demand is being met, whether through physical bullion, coins, digital silver, ETFs, derivatives, or arbitrage strategies. We'll also touch on customer trends, regulatory frameworks, and what the future holds. To bring this to life, we have a stellar panel representing diverse parts of the silver value chain, from bullion trading, asset management, and alternative investments. I'm going to break this discussion into 4 segments. First, the landscape and demand drivers. Second, the product ecosystem. Third, the regulatory framework. And fourth, the investor segments and future trends. So let's start this discussion with a question to all panelists. Okay. How have you seen the silver demand, investment demand, evolve over the last 5 years? And what are the major macro and micro factors driving the interest in silver?
Good afternoon, everyone. And first of all, I would like to congratulate Mr. Ganpati for, conducting this third successful India Silver Conference. And I think it's my pleasure to be here. I'm here for the first time, but hope to look forward to several such interactions. Just to answer, briefly answer your question, if you look at some of the data over the past couple of years, say for example, so I would like to compare this phase of 2015 to 19 versus 2020 to 24. So something did change between the last 5 years as compared to the previous 5-year period. If you look at the investment demand per se, that is specifically the physical silver bars and coins demand globally, we see that there has been almost a 21 to 22% rise in the silver demand only on the physical side. It is somewhere around 252 million ounces in this period versus the previous 5-year period where it stood around 206. So there's definitely a discernible change which can be seen. Also, the ETF part, that has taken off quite a bit. So there as well, if we see the data, 56 million ounces is the average for the last 5 years. The previous 5 years was just about 21. So there's almost been a multiplier effect over there. More than 2 times the demand has risen. And India has played a stellar role in this because even last year, if you see, global investment demand, if you see the physical side, actually fell by 22%. It was led by US wherein it fell by 45%. Germany, there was this VAT issue wherein they raised the VAT on silver coins. So there it fell. But in India, it actually grew by 21%. And, ETFs have played a very important role. So Mr. Vashisht will be, I think, elaborating on that. But from my side, I can say between 2023 and 2024, we have seen a multiple rise in, ETF AUMs. There has been an element of silver prices, but 3,700 CR in about 2023, it's grown up to almost 15,000 CR right now. Even the folios which are registered have grown threefold from 1.9 lakhs to 6 lakhs. So there's definitely some interest, more than sufficient interest in silver investments coming up.
Navneet?
Yeah, good afternoon, everybody. And coming to standpoint where we are discussing what has led to the demand for silver, primarily, as Amit compared 2014-15 to 2019 was a different phenomena where China was one of the leading consumers of silver, along with China itself growing very rapidly. But over the last 4 or 5 years, China has been struggling to come out of the woods gradually. Over the last 1 year, we are seeing some kind of a different momentum in China, but that was not the case for 2021, 22, 23. So what is happening is today as we speak, it is no more, as Johnson pointed, it is no more the close cousin of gold. The correlation between gold and silver prices is merely 50% for the last 2 years. But if you compare copper and silver prices for the last 2 years, the correlation is as high as 85%. So it is largely behaving like an industrial metal vis-a-vis primarily a precious metal, which typically the tendency for silver was. Now, the demand for copper obviously has been on a rise because China is coming out of the woods. A lot of global phenomena and macro things were changing. But over the last 2-3 months, things have gone a little haywire. Now, coming to what has happened as far as demand side scenario is concerned, he's mentioned a lot about global demand. But in Indian terms, about 100 gigawatt worth of solar installation has happened. That has required a lot of silver as a product. A lot of photovoltaic cell deployment has happened in silver. As he pointed, a lot of silver has been consumed as far as physical investment or ETF investment is concerned. About 15,000 crores worth of silver is in form of ETF, which largely at current price of about 1 lakh rupees will culminate to about 150 tons or more. So primarily this kind of demand is sitting ideally and ducked inside a warehouse and is going to kind of continue to give you returns, and this is not going to come out in the system, which Mr. Philip was talking about, that farmers have dug and put it inside. Likewise, ETF players have dug silver and put it inside their vaults. It is going to come out at a later date where prices explode or probably implode. And that is how the nature of silver is going to be the for next few years.
Thank you, Navneet. So taking forward from what Amit and Navneet highlighted, so the last decade was a decade for surplus in silver. This decade we have seen it's becoming a deficit, which again an indicator that silver price can move on the upper side. If I talk about silver as an ETF, so this industry is very new. So within mutual fund industry, this is the newest asset class. So 2022 was the first ETF launched. Within 3 years from zero, currently sitting we are touching close to 16,000 crore. So which is a huge number considering a new asset class. Last 5 years was an era for equity. Everyone was chasing for equity return. Within that period, this one category has done tremendously well. Last 1 year only from 4,000 to now 16,000, close to 4 times growth, clearly indicates that people are looking to this as an asset class. Generally, we have seen whenever there is a global turmoil, there is some kind of a volatility, people generally prefer to go to the safe haven. Gold and silver are one of those options available in the industry. Second, between gold and silver, the advantage with silver is to store silver for a retail investor is very tough compared to gold. So it's a very easy way to buy a silver. You're getting 100% insured. You get a real-time price. You can sell at real time. So that's one of the advantages we have seen. A lot of retail investors now coming up in this as a picture. Fintech helped us big time. Now with a one click you can buy a silver. With a one click you can sell silver. Silver available with us in two forms. So what I mean by two forms, although we are talking about silver ETF, the AUM of 16,000 crore of ETF, out of that more than 50% AUM came from ETF fund of fund. So basically fund of fund is nothing. An investor who doesn't have a demat folio, a traditional mutual fund investor can buy through that as a route. So these two routes are really helping up silver ETF to grow. And I'm sure next time we'll meet, this is one of the hottest category to be. Thank you.
Very good afternoon, everyone. So, I'm sure there are lots of insights. So I've got very less to say with this front guys here, but I would like to take a ride to 2011 when we saw $50. Demand was crazy that time. I remember people were on the streets and they wanted silver by anyhow because the prices went from 18,000 to 52,000 and people were anticipating we are looking at 100,000, 100,000. This we are talking about 2011. What happened in 2016? So the investors who invested in 2011, they got scared because the prices didn't sustain. It came back in a very, very short period, That actually outshined silver investment in those times. कि ये तो लाख होने वाला था, but now we are back at 25,000. So that actually kept a market away from coming back from the investment demand. 2017, 2019, they got a chance to exit because they got the same levels. So the market was flourished with the scrap silver coming into the market. And then people were like, okay, हाँ भैया, चलो, we got a exit now from this material which we invested like 4 years or 5 years back. In 2020, I was just speaking outside with a couple of friends. We got Reddit coming in during the COVID. Reddit smashed the silver prices, the Eagle coins in US markets, and we saw major up in September 2020, if I'm not wrong. So in September 2020, that silver was pushed from $26 to $30 in just a day. And then it came back and there was nothing happening, it came back. But since last 3 years, the kind of a price movement what we saw from 60,000 to 85,000, surely 85,000 when it came, there was a scrap material came in. But the kind of a scrap material what we saw in the history, that wasn't the over of the ground silver which actually came into the market. It was actually 40 to 50% lower than what we saw a couple of years back. Today's scenario, when we saw 95,000, 100,000, we see a very less of a material coming in as a scrap. That actually means that the silver demand for the investment side has actually grown. Otherwise, it would have come back into the market and we wouldn't have been there in the market to supply more silver. Now, we are running a platform, which is a digital platform. Since last 2 years, we have seen a ratio of 70-30 of gold buyers and silver buyers. But since last 2 quarters, that ratio has gone reverse. There are people buying at 100,000. They are taking deliveries of small material, maybe 500 grams, kilobar, 5 kilobar. So what does that show? That actually shows that an investment demand is actually there in the market. And when we have a shift like this and having a platform and that can actually show you that there is a retail participation coming in such a huge numbers, I'm sure the kind of an ETF performance what we have, it is actually phenomenal. We can't see, like, in just 2 years, you have so much of AUM in the market. If that wouldn't have been there, obviously, guys like us would have supplied that. But the storage issue, that is the biggest issue for a silver investor. Let's say if one wants to invest 1 ton of silver. Now he's not going to keep it in his house, 1 ton of silver. So that's where the role of ETF and then a role of platforms like us come in, wherein you need not to worry about storage of a material, but at the same time you are keeping yourself invested into the asset class.
Thanks, Chirag. Actually, I have a follow-up question for Chirag itself. You have been the biggest physical player in the market for years now. So what's the demand outlook for bullion coins, medallions, and are purity, trust, or taxation limiting factors?
There was a session of MMTC PM showing
Yeah.
that they have got some material coming in and they've got it tested. So those are all silver jewelries. But when I asked about a coin, he personally told me that they have not seen that kind of malpractices happening into the coin. Now, even if a malpractice is happening in a coin market or a medallion market, which has a very good demand, to answer your question first, it actually has a very good demand, but when that coin will go back to the market, I don't see that coin going back to the market until unless there is anything shift to it, right? Today, everyone would have some of the other coins, Ganeshji, Lakshmiji, gifted, bought on the auspicious time, Akshaya Triti pe liya, idhar liya, udhar liya, but I'm not sure that coins actually come back into the market. They will not come back into the market. It might come back if we see prices going from 100,000 to 150,000, yes, then it will come. People will like profit taking. Let's take the profit, take the money back, and then we'll try to invest maybe later on when we see a better pricing coming into the market. Then only those coins will come into the market. Otherwise, those coins will not come into the market.
And what about the digital silver? How is that?
So digital silver, the kind of a rush we are seeing into the platform, it was very surprising for me. Yesterday, in fact, I told my team, you give me a data wherein who has bought silver who are below the age of 20 years. And surprisingly, out of the 35,000 active clients, there are more than 2,700 clients who are below the age of 20 years. So the digital thing has to take a front foot down the line 3 years, 4 years, because those are our new clients, those are our new investors. You're not going to buy on the platform. You'll be like, okay, I'll buy it, keep it somewhere safe. You'll buy a artifact, you'll buy a silverware. But the next gen, they are not going to buy an artifact. They are going to buy a digital asset.
Thanks. The next question I have for Amit, Vashisht, regarding the silver ETFs. Like, we have seen a huge, investment there. So give us some color about, and something about how it's been doing, the platform's doing, and how it's moving.
Sure. So as we discussed, highlighted, it just came 3 years back from 0 to 16,000. If we break up, the split is between 3 categories. One is, again, digital retail investors. Majority of them are coming through fintechs. So when you talk about fintechs, we talk about Grow, Zerodha of the world, and all traditional ICICI securities, HDFC securities. Those are the platforms who are picking up in retail as specific. Second retail division, which is coming up with our traditional distribution, which is like IFAs and national distributor, they are using ETF fund of fund. We have seen a lot of SIPs also coming in silver ETFs, which is again give us a good picture that how this business will grow up. So that's on the retail side. Second, we have seen a pickup in ultra HNI as well. A lot of ultra HNI investors seeing the gold silver ratio. They are moving, taking a bet more on a silver recently, what we have seen. So ultra HNI investors are now starting coming into silver ETFs. Third is an institutional piece also. A lot of AMCs are also buying. You talk about, there's a category called multi-asset fund in mutual fund industry, which is more than now 1.5 lakh crore. So those are also become a big investor in silver as a category. So these are the three categories which are putting money in this silver ETF.
Thanks. You mentioned about, the gold-silver ratio. This question is to Navneet. With the gold-silver ratio is now above 100, I believe, right? Is the skewness overdone, or could we see a return to the COVID levels? I believe around COVID, it went to about 125, I understand. The long-term average is around 55 to 65. So the current levels, does it imply that silver is relatively undervalued?
Well, we were doing a similar analysis for the last few days because this ratio spiked up from 1992 levels to 107 levels within no time. Now, why is silver underperforming? That's a different story because mining activity is dull. Gold is behaving like there is no tomorrow because of, as somebody mentioned, every tweet of Trump puts it up by about $100 every alternate day. So that is not the case with silver. So that is why you're seeing a lot of skewness in this ratio. But fundamentally speaking, it is still in a deficitary scenario. Fundamentally speaking, the demand side story still continues to be very, very robust. And I wouldn't say that if this trade war kind of scenario continues for the next 6 months, 1 year, demand side story will definitely take a back seat. There will be enough and more supply coming into the market because China predominantly is the largest player of the story. So the ratio today at 104, 105 is a little overdone. Will it go to 125, 127, which it touched during COVID levels? Primarily, I don't think that is the take as of now. The 5-year average is about 72. The 10-year average stands around 66, 68.
Yeah.
I would be happy to see that this correction, or probably now which one is going to underperform and which one is going to outperform is somebody's guess. Maybe gold, the little froth or the excess froth which is developed could fade away if there is a truce between these two countries, or maybe silver could start to outperform gold eventually from here on. This ratio eventually will come to about 1992 over the next, say, maybe 12 months or so. That's about a clear 10% correction from current levels, and eventually over the next 3 to 5 years we will be seeing this ratio around 70, 72 level, which is the long-term average for the next 3 years. That is our take, that about 70, 72 is where we see prices coming in. Who's going to outperform, who's going to underperform, that will come to load at a later stage, but ratio is kind of had its hand overplayed. This skewness will start to deviate once again.
Thanks.
So I would just like to add to what Navneet said actually, and I do concur with him that it seems to be pretty extreme right now. And just some more data or statistics, if you look at the past 2 recessions or global slowdown scenarios. So the latest one was in 2020. So March 2020, we saw the ratio actually shoot up from something like 80 to 127 in a matter of 3 weeks. And after that, for the next couple of months, it actually abruptly reversed course and went to 70 in a matter of 3 months. What happened in 2008, at the height of the global financial crisis, the ratio shot up from something like 50 to 87, which back then was a lifetime high for the ratio. It fell to a level of 60 in a matter of 5 months. So, we generally see that during the height of uncertainty, the ratio actually reverses and goes down. And a glimpse of that was seen even last week. We saw the ratio fall from 107.2 to about 97.5 in a matter of 3 days. So, I would like to concur here that, this could be a good time to go in a staggered way in the ratio, or maybe long on silver alone, because that might grossly outperform gold in the coming weeks or months.
Thanks. Again, the question to you now is, what's the current view from institutional desk on silver arbitrage and structure strategies?
Before coming to that, I would just like to throw some light on what we do. So we are a pooled investment vehicle which is regulated by SEBI, and we invest in commodities, and precious metals like silver form an integral part of our portfolio. Our clients mainly include HNIs and family offices because the minimum ticket size is 1 crore and above. That lends a level of depth and maturity to the market, I would say. Our main aim is to invest via derivatives, and that's why leverage is involved over here. And we aim to get absolute returns. So irrespective of where the underlying goes, so even if gold goes minus 5%, our aim will be to give you a positive return. So it's not relative returns we aim for. So for this, we deploy a host of strategies ranging from long short, that is directional ones, then coming to arbitrage, as you just mentioned. There are also event-based strategies. There's algo-driven trading, and also there is calendar spread strategies which we do. Now, that is why the arbitrage part is one part of what we do, and it is more opportunistic. But I would like to say the last 2 years have been fantastic. Why? Because in 2022, we had an agreement, that's a free trade agreement with UAE under CEPA. So because of that, a lot of silver was flown into India at a discounted rate. And the exchange inventories just blew up from something like 80 to 100 tons in 22 to about 420 tons just earlier this year. So that suppressed physical prices somewhat and gave us that leverage, wherein we could go for a cash and carry arbitrage or a spot to future arbitrage and get more than double-digit returns actually. So, it has been going pretty well. Right now, because of the EFP thing which came about, exchange inventories have been drawing, the latest one being, about 157 tons in the exchanges. Because of that, the spread has narrowed, but I think we'll definitely be looking forward to capitalize on these opportunities going forward.
Thank you. Now we'll go to the regulatory part of it. So this question is open to anyone. What are the key compliance considerations for silver investment?
So as far as ETF is concerned, SEBI regulation says that we have to hold a physical gold or silver. That's a mandatory. So whatever we do, whatever silver we have, it is in physical form, it is insured, and it's in vault. So that's a regulatory says, and we are following that process. So that's the advantage an ETF have. When someone is investing in a digital form, they get that comfort.
I'd like to add that. So we are not regulated. We don't have anyone coming and tell us, अगर आपने इतना सोना चांदी बेचा है, आपका सोना चांदी किधर है, right? But we have been approaching regulators to do regulate platforms like us. So there is more of awareness.
Yeah.
The one who is left out in ETF, I hear with us. But we have done something not similar to be regulated, but similar to have a pure awareness, wherein an investor holding digital gold or silver at our platform, they can request us and they can go and physically inspect the vault where we have kept gold and silver. So that is one initiative which we have taken to spread the awareness that you can anytime take an appointment, go to a vault in Brinks or Sequel, wherever metal is stored, can go there, check by yourself what kind of a bar.
So just to bring a little bit of trust and sort of credibility in what you're doing. So that you're doing it on your own, self-regulating.
Yes.
Yeah. Okay. Navneet, anything to add on this?
Well, on the regulatory front, I think Exchange is doing a great job. They have been publishing their numbers very actively. And as far as other participants are concerned, like DigiSilver and Amrapali and others, ETFs are one of the bigger factors which are driving prices at this point in time. ETF is physically backed, is pretty much verified. They share data on their platform, and all the material is pretty much compliant with GST paid and all these certificates. So I think as far as regulatory framework is concerned, it's very tight at the moment.
Okay. Thanks. Amit, you want to?
So there are a couple of regulatory provisions which we need to comply with. First is that the notional value of a commodity should be just 10% of the investable funds. So if the fund size or the NAV is about 100 CR, we cannot exceed more than 10 CR in a particular commodity, say silver. Second is that the leverage which we have cannot exceed about twice the fund size or the NAV or the investable value of the funds. So that is another. The third is on the, we can deal in those commodities which are delivered to us in lieu of the derivatives. So we can, hold those commodities. And lastly, there are like normal disclosure norms which are there. Which are given by the fund managers and the KYC norms which we need to follow.
So we move to now the trends, and I just want to understand from the panelists, who is buying silver today? HNIs, retail, or institutions? Are we seeing a new demographics emerge?
Well, I would like to take that question. We are seeing a penetration across the segment. As Amit mentioned, the number of folios that have risen for ETFs clearly indicate that retail participant has been on a rise. There is 3x jump in the number of folios, which typically retail investor participates in ETF format. I belong to the broking fraternity, where we trade on the derivative exchanges, where we see a lot of traction at lower prices coming in for silver micro contract and silver mini contracts. So people are willing to buy 1 kg worth of silver in derivatives format also, 5 kgs worth of silver in derivatives format also. These also we see a lot of traction in silver from ultra HNI and HNIs, because gold has had its own share of run up and there is a need for diversification across assets. Most of these wealth management firms are kind of indicating all the participants or their clients to invest about 5% to 10% of their AUM between gold and silver. Now, as an investing house also, we advocate that it could be a mix of 50% gold and 50% silver, because we are overtly bullish on silver, and we see that a big traction in gold has already come in. So a lot of HNI participation is also there. And fourth is institution participant, which typically are the arbitrage funds, where you are seeing a lot of traction in the last few years. As Amit also mentioned, we see a double-digit kind of a return in silver prices for the last 2 years, just by purely and spot to future arbitrage. So how does a spot to future arbitrage work? We buy it on a derivative segment, and so we buy the physical metal and have a counter sell position on the derivative exchange. And that is done with a huge large ticket size. So there's a price differential between the domestic current price and what is traded on the exchange. Typically, it's a 2-month rolling cycle for every contract to mature. In a year, you have about 5 expiry, and the prices being locked is giving you about 9 to 10% kind of a return every single year for the last 3 years. So this is more than what your bank FDs or your so-called bonds are giving you, and it's a kind of a largely risk-free product. The only compliance issue that you need to take care of is you need to have a GST certification as an organization. If you are participating or a corporate, you need to have a GST certification for Gujarat state, because most of the, about 95% of the delivery typically happens in Gujarat. So if you have a certified certificate of Gujarat, you could be a participant in this segment, and about 10% kind of a returns is easily available on the table.
No, so I totally agree. Basically, we have covered everything on that side. The advantage, what he highlighted, that silver ETF is also with the GST compliant and everything. So I think that's given an edge that over a period of time that it will keep on growing.
So the next question is, what's your outlook for the future of silver as an investment class?
Yeah, so I think we have discussed a lot about the industrial and the investment demand, and actually I feel that these two are the major pillars. Only thing I would like to add on the industrial side, it's going pretty strong, no doubt. And even last year we had a record high industrial demand led by photovoltaics. India is also leading here because as Navneet already covered, we have more than 105 gigawatts of installations. Last year alone we tripled, like from 8 gigawatts in 2023 to 24.5 last year. So India is leading the charge along with China. What I feel is that, investment demand also follows industrial demand. For this, I would like to give an example of another commodity like natural gas. So natural gas, much like silver, used to be perceived as a speculative and, a cyclical or a seasonal commodity. But now we have got the added element of liquefied natural gas, that's LNG, which has come into the picture. The next 3-4 years, the demand is, the production from US is just likely to double up because there's a lot of demand coming up from Europe, from Asia. So it is lending stability to the price. The risk-adjusted reward which you get from there increases, enhances because of that. And that is why there's a lot of investment incentive which is there in that counter. Similar thing could happen in silver as well if industrial demand stabilizes. One thing which I foresee over the next 10 years which can add to industrial demand for silver would be on defense. You know, the kind of world we are living in, we are going from a unipolar to a multipolar world with a lot of, you know, geopolitics involved. A lot of countries are trying to become independent and self-reliant. We saw Germany, you know, trying to increase their budgets. You know, they could infuse anywhere between 500 to 800 billion dollars over the next 10 years into their defense. And, you know, silver could play an integral part in that, because a lot of, you know, printed circuit boards and, you know, other such stuff are used in, say, you know, missile technology and also radar systems. So, you know, this is one aspect which could, you know, leapfrog silver investment going ahead because of a stable industrial demand for silver.
Thank you. Thank you. I think we have more or less, you know, covered most of the stuff. We have some questions that, you know, are on the board. So, the first one is, what's the experience of independent platforms like DigiSilver, non-ETF, non-SEBI regulated entities in terms of change in demand in the last 2 to 3 years? Yeah.
So, the demand for a retail investor has always been a price sensitive. Okay. So, whenever there is a correction in the price, you will see demand coming in. But as a platform, we have not seen investors panicking. If the prices has gone down, they have not sold. So that is one of the confidence which is actually coming into the silver market. Apart from that, let's say there are investors who have bought silver at X price and the prices has gone down. Usually our Indian mentality is, let's get an exit, let's book a loss. But at our platform, what we have experienced is they have taken a physical delivery of a silver and kept it at their place. So we have not seen people going back. We have not seen people panicking when the prices has gone down. At the same time, if the prices have gone up, they have added more to their wallet in the investment cycle.
Okay, thanks. I think Shivasa just warned me that there are lots of questions here, so we'll have to keep our answers short. Okay, what is the sentiment around sell gold and buy silver trade? Anyone?
Well, over the last few weeks or months, we've seen that this sentiment has changed very drastically from about 90 to the ratio to about 107, then coming back to 97, and again, as we speak, it's around 104. Now, this sentiment is going to keep on fluctuating, and the oscillator is going to be, because silver is a little naughtier than gold, but today gold is naughtier than silver.
Yeah.
That is how the volatility has been. Eventually, when things start to subside and things come to equilibrium, then even the demand side story is going to be better for silver vis-a-vis gold, and probably gold, the excess, as I mentioned, the excess froth or the excess kind of boil in prices that we have seen should eventually cool off. So our stance is that anything about 105, 107 is a good level where you could fix up this spread, where you could look to buy silver and sell gold, and probably you would see it over the next, say, couple of quarters or more, subsiding it toward 90, 92 levels.
Thanks. Okay, the next question to Amit. Yeah, what is the scope of ETF growth?
So my understanding is they are asking silver ETF.
Yeah, silver ETF.
So if you see last 6 months, just go and see the NSE volume. Out of top 5, you find gold and silver will be there. If you go a year back, gold and silver volume was not even top 10. So now for either gold or silver on first, second or third position. So that clearly shows that people have started trusting silver and gold ETFs. They are buying it on the exchange. We have seen a volume of upward of 100 crores happening on the exchange. So when I mean by exchange, you can buy silver ETF in two forms. A retail investor go on the screen and can buy it up to 25 crore. If you want to buy more than 25 crore, you can come to an AMC. So when I talk about exchange, it's our retail investors. So which clearly shows that people are now looking gold and silver as an option. They are not trusting ETF, they are able to buy it on the screen. So which is a very positive sign, and we feel in next 5 years, you might see gold and silver both as an ETF as a category growing big time in India. Because these two assets are not new to India. For Globe, they might think there's a new investment. For India, it's a very old investment. And specifically, you talk about the new generation. They have seen only equity in last 5 years, how equity have behaved. Now they have started understanding how the other assets class can behave and how easy to buy. For them, the most important thing is, can they buy it easily? Yes, they can buy it easily. Can they get return? Yeah, return are visible. We have seen what happened in last 1 year. There's a huge chance that you can see silver ETF will do well in next 2 to 3 years.
Thanks. Chirag, the next question is to you.
So, for a long time, silver coins used to be sought by families for Lakshmi Puja. I am sure. Yeah. Yeah, sure. So, no, it has actually. I'll not abide by that, because what has happened, there is no big shift that gold coins are not used on the Lakshmi Puja day. But having said that, people when they started having gold coins and they had a more trust, they were better to have a gold invested rather than silver invested. There was just a shift of an investment. But today also, there are equal number of silver Lakshmi coins have been used as a auspicious day on the day of a Lakshmi Pujan. On the extension, what you asked, can you just come back, please? So for Akshaya Tritiya, those are one of the auspicious days to buy gold and silver. There will be a shift from a gold demand to silver demand. As in, just before a year, a gold coin of 10 grams was X and a silver was X, right? So even if I want to have a gold coin of 10 gram, it has to be 30-40% higher, because we have escalated the prices of the gold so much. So at this Akshaya Tritiya, we are anticipating there will be a more sale of silver rather than of gold.
Okay, I think I'll move because we have not much time. I'll go to the question here. It is estimated that India holding of silver is about 70,000 tons. What's your view on having silver monetization scheme? Any takers for this? I know there's a gold monetization scheme that is there, which the ETFs can use, sort of things. But what about silver?
So, first of all, it is not 70,000 tons. It has to be way higher. But having a silver monetization scheme as of today, I don't think until unless we have a regulated ETFs wherein there is a regulated custodian coming in, because it is not possible for the silver which is lying at the houses come back into the market, because that is going to create a pure havoc, because they don't know what kind of a silver purity they are holding in their houses. So I don't think today is the right time, but to financialize it,
For what
it would
about
be a better
gold ETFs, like silver ETFs, for example?
Yeah, except for the ETFs can, I believe.
Yeah, so I'll cover this question also and then the next as well. So definitely that's what we believe that silver ETF can do for the household to move into this as an asset class. And obviously the second question doubts that. But we have seen when gold were introduced that the same questions were coming at that point in time. But if you talk about today, we are touching almost 80,000 crore in gold as well. So I'm sure that you will see silver is also picking up this as a space.
Thank you. I think now we'll end the session. I think thank you to all the panelists for such rich, thought-provoking insights. It's clear from today's discussion that silver is no longer just a supporting actor in the world of precious metals. It is emerging as a serious asset class in our own right. Whether it's through physical, bullion, digital platforms, ETFs, or structured arbitrage products, the investor ecosystem around the silver is expanding rapidly. We have heard how customer demographics are evolving, how regulations are adapting, and how financial institutions are innovating to meet this growing demand. A few key takeaways: silver's dual role as an industrial and investment metal is unique strength. Accessibility and trust are key to unlocking retail participation, and collaboration across the value chain from refiners to banks, asset managers is a vital scale. To the audience, thank you for being a part of this session. If gold is a tradition, then perhaps silver is an innovation. And the next few years will be pivotal in defining the investment story. On behalf of Eventel and the panel, I'd like to thank you once again, and we hope this session helped you to see silver in a whole new light. Thank you very much.